Hello, it's Jordan. This video is being recorded on the early evening of Wednesday, March 29th, 2023. Thank you so much for joining me. In this video, which I intend to be a more brief video than usual, I am going to talk about one important signal for gold stocks. It's a very bullish signal and why it's very close to triggering. Well, at least I have two of them. There's two things that make up the signal. As you can see there, the bottom two things. One of them looks like it's going to trigger in the next day or two. Might take a little while for the other one to trigger after that. So we're looking at breadth thrusts, and specifically we're looking at the GDX advanced decline line. So in this chart, we have GDX at the top. Then below that, we have the GDX advanced decline line. And below that, we're looking at the advanced decline line on a rolling 15-day basis. Then at the bottom, that's a rolling 25-day basis. Now, in past videos, I've discussed the importance of the advanced decline line. This is a time-tested indicator. It's a breadth indicator. It's a leading indicator. It's one you see frequently used with the stock market. It's a great leading indicator. I mean, no indicator is always perfect, but this one comes pretty close. And so reviewing some history, we go back to the end of 2015 or the beginning of 2016. You had a positive divergence there in the advanced decline line. I mean, GDX for a time made a lower low. I believe that was the lowest low. I mean, that's the low, major low as it stands now in January 2016. But at the time, the GDX advanced decline line made a higher low. That was a negative divergence. Now, going back to early 2020, the GDX advanced decline line was really strong, and it was strong into the COVID crash. So the COVID crash was a true, real black swan that really could not be seen or anticipated beforehand, at least looking at these indicators. So the advanced decline line remained really strong even during the COVID crash. GDX made a lower low, of course, but the advanced decline line surprisingly did not. So that was obviously an important signal as the market recovered, and amazingly it recovered. I mean, it recovered in amazing fashion. Now, more recently, you look at the end of 2022, the past last summer, looking at the fall, you had a positive divergence in the advanced decline line, whereas GDX made a lower low. And also recently, on a smaller basis, you did have GDX make a lower low, but GDX made a higher high. So the advanced decline line is important with respect to divergences. And to give you a definition, we're looking, the advanced decline line, we're calculating every day and then, looking at it cumulatively, throughout various periods of time, how many stocks are going up in the GDX versus stocks going down. So it's a participation indicator. And the reason these types of indicators are important is a market is at its strongest when most stocks within that market are trending higher and moving up at the same time. That's when you have a really strong trend. And so typically, you see a positive divergence, and the way the trend starts out is as a market or industry or sector is declining, it's coming down. And at the end of that bear market or downtrend, before it hits the bottom, you start to see the participation. Fewer stocks are going down, and eventually the market turns around, and then you have stocks are going up, and the trend is the strongest when all the stocks or 90 or 95% are going up. So that's why looking at participation indicators is really important. So all of that aside, breadth thrusts are important because when you're coming out of a bear market or a downtrend or any significant correction, on the other side of that, not only do you want to see a positive divergence and increasing participation, but typically, real bull moves are preceded by these sudden bursts of really strong participation. So, how do we quantify that? Well, we look at the advanced decline line over, you look at over a 20-day period, 10-day, 15-day, 25-day, 30-day. So So I've kind of created my own indicator here trying to measure bread thrust, and that's what we have at the bottom. And so we can see in early 2016, based on the history, I'm looking at the last 10 plus years, that was a real bread thrust in early 16 on both a 15-day and 25-day basis. Now, the 15-day was triggered. It got to that level before the 25-day, which, that obviously took, a couple weeks after that. And then if you look at 2019, I believe this is in June, right when the Fed cut interest rates for the first time in years. And so even when going back to the end of May when, the Fed began to indicate that they were going to cut rates, so you had a really strong move, and then that kept going, of course, into and then after the first rate cut there in June, or was it July? I can't remember exactly. But again, if we're looking at the last 10 years in these 15-day, 25 indicators based on the advanced decline line, we can see here that those marks really stand out as true bread thrusts. Now, another thing is looking at, you can see thin lines at the in August of 2020 and at the beginning of 2017. Sometimes you can get bread thrusts when you're not coming off the bottom, and so those are less significant. I mean, these really work best when you're really the market's recovering. You're coming out of a bottom. You're trying to really establish a trend because by the time the market's already been going up for a while and you get a bread thrust, it can actually be perhaps a negative. So anyway, all that aside, looking at where we are here and now, look at the bottom right, those boxes I have. So the 15-day rate of change in the advanced decline line, that's very close to hitting that mark that it hit at those other 2 points. And if you look at those other 2 points, it hit that mark first in 15 days, then a week or two after that, it was triggered based on 25 days. So the 15-day indicator is really close to triggering. It's possible we could see this over the next couple days, then the 25-day after that. So I think if the gold market, if we were to get a daily close above 2,000, or on Friday, if we get a close above 1980 or 1985, I think you're going to see, the 15-day bread thrust triggered, and then after that, you'd probably see the 25-day bread thrust triggered. So I know this is a lot of talking just for one chart, but the point is the gold stocks are really close to triggering a bread thrust. And so we have to be a little careful here about, expecting some kind of big correction, because that, if the miners trigger a bread thrust here in the next couple days, that really pours a lot of cold water on the idea there's going to be some big correction coming. So that's just, that's something to be careful about, because, if you look at those other two bread thrusts, the market got going, it had a lot of momentum, then it made the bread thrust, then it kept going. And so there's a risk that we could see that happening this time again. Of course, how the sector closes the week, that'll also be extremely important. But this is just another important thing I'm thinking about. Thank you so much for tuning in, and I'll see you guys again in the next video.